Hey there, everyone. All right, market has been crazy, all right, the entire week, all right. And how has your trading been? All right, now, so what I want to do in this video is I want to provide you an update about what the market is actually doing right now and how, right, you can get yourself in the know about what trades you want to plan for and what you want to be doing in the markets in the coming week. All right, now, so I'm going to share with you some very, very important thoughts, right, from the perspective, right, of a trader in the market, right, and the things that I see in terms of what the market is trying to do right now that many retail investors may actually miss out right now. So treat this as a knowledge accumulation, right? But also an awareness, right, for how you plan your trades going forward. All right. Now, so in these videos over here, I hope to bring more education and more knowledge, right, into how you trade the markets and how you can understand the markets better together with me. All right. Now, so let's get the video started. All right. Now, so if we focus on, all right, what I'm going to do over here is I'm going to share the charts. I think it's already being shared. All right, now, so if you look at the charts on my screen right now, all right, now, what you're going to see over here is I want you to zoom in and focus on what has happened this week. All right, now, so ladies and gentlemen, if you look at what has happened this week, all right, now we started the week, all right, in the most negative of any market tones for a very, very, very long time. All right. Now, what I'm trying to say is people have been looking for a bounce, all right, a bounce on Wednesday, a bounce on Thursday, and it never came, right? And instead, what we have was those little jumps, right? And then it gets sold into, right? Now, so many of the traders are actually very shocked, all right, when it comes to these kind of actions that are being happening, right, in the markets this week, right? Now, I say this because, right, many of the traders who have joined the market in the last, I would say the last decade itself, right, has never seen a sell-off that behaves in such a manner, right? Or very few of us actually remember that this is something that the market is actually capable of doing, right? But the market has always got a way of reminding traders, or what we say, humbling traders, right, who get lax, right, in terms of how they look into the markets or how they position themselves. Right now, so what I want to say is market ended the week, right, with many people declaring the bull is back. All right, now we've got an amazing rally, all right, on Friday. That was how it closed. But if you look at what happened on Friday, all right, if you look at just Friday itself, yeah, it may look substantial, right? But if you look at the entire week, right, did you notice something? Right, we closed lower for the week. Right now, so if you actually close lower for this week's of trading, right, how are you screaming that, hey, everything has changed? Nothing has changed over here, right? And in fact, all we did, right, if you notice, was just to recover, right, and get back, right, to the middle of this entire week's trading range, right? And, okay, something big that I want to bring to your attention in this video, yeah, okay, it's really this, right? How many of us actually look, right, at this indicator of the market, right, that has been shouted by so many traders over the years, right? That, if you want to know if the market is dangerous right now, if you want to know if the market is done selling, right, you just need to pay attention to this indicator, right? How many of you heard of this before? Right now, so the indicator I'm talking about over here, right, is actually the VIX. Right now, so for those of you who are new to markets, right, if you don't know what the VIX is, right, it just stands for, if you look at the right-hand corner, right, the volatility index. Right now, so it measures the volatility in the markets, right? And right, if you pin down right on the formula itself, right, it just represents right the number of 30 days expiry options or put options that are being bought, right, versus the call options. Right, so you have the put options as the numerator, the number at the top, right, and then you have the call options as the denominator, which is the number at the bottom. Right, so what happens is as market falls, right, people start to panic and they start to try hedging and protecting themselves by buying these put options. Right, so as more and more people scramble to buy these put options, right, what it does is it makes the number on top much, much bigger than the one at the bottom. Right, so this shoots this index number up, right, and it shoots it up very, very quickly. Right now, so people say that whenever you see a spike in the VIX, right, it coincides with a market sell-off, right? And right, when you start to see that the VIX starts to taper down, right, that's when you know that things are going to get better. Right now, it seems like, right, that's what the VIX is actually trying to show us, right? But do you notice something? right? If you actually notice something right now, you would see that didn't the market fell, right, on Tuesday? Didn't the market fell on Wednesday? Didn't the market also fall on Thursday and only recovered on Friday? But if you look at the VIX, right, what was the VIX telling us? Do you notice that the VIX was actually telling us a very, very different story? Right? So while the markets are coming down, right, on Tuesday, Wednesday, and Thursday, right, it seems like the VIX was also doing the same thing. Right? So while markets are selling off, right, what the VIX is trying to tell us is that there are lesser people, right, who are buying into put options. So what does it tell you? Right? Now, some of you are wondering, Terence, what does all this mean? Right? All I'm trying to tell you, right, with this, with this description over here is the fact that the selling is not done. Yeah, okay. Now, if you think that all the selling is over because of what you saw on Friday, right? No. Right? The market officially went from a big bull market that lasted more than 10 years, right now into a corrective territory. Right? I'm not going to jump ahead of the gun and say that we're in a bear market right now. No, we're not. We're just in that 10% correction zone. Right? And in fact, right, if we go back to the markets over here, right, where the market closed, right, on Thursday night, right, was exactly the 10% mark. Right now, so when market falls from its high, right, where it was, right, and down by 10%, right, what it does is that the market starts to label that it moves into a corrective territory. Right now, so when it moves into the corrective territory, all right, what it does to the bullish side of the traders, right, it makes them a little bit more apprehensive, right, as what they were used to. Right now, so what I'm saying is during a bullish market, right, every time we have a dip, right, you see some bulls coming in to support the market, coming in to buy it up, right? But when you enter a corrective territory, right, these bullish traders, the one that has been doing all these kind of things, are going to think much harder if they want to do this now. Right? Why? Because they know that the sellers are there as well. The sellers are present. The sellers have came in. All right now, so it's going to make them a little bit more hesitant, right? And now is where you have that fight, right? That fight of the buyers and sellers, right? And then trying to edge each other out, right? Now, so what we saw is on Monday, Tuesday, Wednesday, and Thursdays, right? The sellers have the upper hand of things, right? And if you think that the bullish traders got control on Friday, you need to think again. Why? Because Friday happens to be the last trading day of the week. Right now, so all the short side traders, right, who have taken up positions from Mondays to Thursdays, right, they have what we call substantial profits, right, to show for. Right now, so don't you think that they want to do some kind of a profit take before the week's close? Right? It's only natural, right? They don't want to hold any positions going into the weekend, right? So they want to start closing some of those positions, right? And that's where, right, we actually see some of this up move over here. Right now, you may think that 100 points in the S&P 500 may seem like a lot, right? But didn't we fall close to 100 points on Thursday itself, which was just the day before? All right, now, so I hope you see where I'm trying to really get to you with this, right? Because we had this, if I zoom in, right, into an intraday kind of chart, right? Now, so this is what we see on an intraday level, right? So let me take away the colored zones. Right now, so if you notice over here, market opened here, right? So we have market that opened for trading here, right? And I would believe that prior to market open, right? So what I'm going to do is I'm going to bring up the 24-hour chart of the S&P 500. Yeah, okay, now, so prior to market open, right? Can you see this is, okay. There we are. All right, now, so can you see this dip that we have over here? All right, so we had the rise, right, and then we had the consumer sentiment, right, which came out, right, very quickly after the market is open, right, for a little bit, right? So before the sentiment came out, right, the SPY was trading close to 560, right? So that's coming close to about 5,600 on the S&P 500. Right, and within the span of, right, this is a 5-minute chart. So within the span of 1, 2, 3, 4. 4 bars, right? 4 bars, which represents 20 minutes of trading in the market, right? We actually saw the market, right, fell from 560, right, all the way down back here to 556.50. Right now, if you can equate it to the index itself. That's a drop, right? That's literally a drop of 565, 56. That's a drop of 35 points, right, on the index within 20 minutes. Right now, if that's not volatility for you, I don't know what else that we can say. Right now, so the market has gone into a very jumpy phase, right, where every news that comes out, right, kind of makes it really unstable. Right, traders are reacting, or I would say overreacting, right, to any tweets, to any news that comes out, right, in the market at this moment, right, and wherever they think it's going to be, right, the actions that follow through tend to be a little bit more on the excessive side, right? But okay, what we have seen on Friday, right, was something that you would love to see on the downside when they were actually selling things. Now, so I hope all these things are not getting over your head, because they are so very important, right, to the health, right, of trading action that you're actually seeing in the market right now. So what I'm trying to say is, on Friday, right, you literally had a very correlated market, right? So when I mention a correlated market, right, so when you look at an index like S&P 500, right, now there are 500 stocks which makes up the index, right? So on Friday, you had 90% of this index stocks, which is the components of the index, literally in the green, right? So we had 90% of the stocks in the green, right? And only 10% of them were actually down for the day. Right, but when you had those down days on Monday, Tuesdays, Wednesday, and Thursdays, right, this percentage ratio was more towards 70-30. So while the markets were selling off that severely, right, only 70% of the index components were selling off, and you have 30%, which is still green. Right now, so if you have traded the market before, you know one thing for sure, right? We have never reached the bottom, right, until everybody has given up. I'm sure you've heard of this before, all right? And when you have an index where there are 30% of the stocks still in the green, that means you have traders who are still looking for pockets, right, of stocks to put their money into, right? Now, that clearly shows you they're still trying to strategize, and they're not in panic mode yet, all right? They're still trying to position themselves and see what the markets want to do, right? So they've not thrown in the towel, right? So these little things over here are showing me, right, that what we have right now is literally a market, right, where you should try to sell on rallies rather than buying on dips. Yeah, okay, now, so if any of you are thinking about going out there, right, and being brave, right, this is my moment. This is my moment to go after some of those big tech stocks. Oh my God, they've been selling off, right? This is the time for me to get in. Think harder. Yeah, right, because you've seen what, stocks like Apple, right, has done this week, right? Now, so Apple started the week looking terrible, right? And it ended the week just as terrible, right? Now, so for traders over here who understand charts, right, if you look at what Apple did on Friday, it's insignificant, because the entire red candle on Thursday swallowed up the entire movement on Friday, right? So Friday's candle is literally canceled out, right? It doesn't represent anything at all when it comes to the Apple charts, right? So Thursday's candles still take predominance, right? Now, so that's Apple alone, right? Now, you might be saying, Terence, but what about Microsoft? Microsoft looks a little bit different, right? But if you look at the stand of things, right, and if you just draw a simple trend line, right, when it started coming down, right, and all the way here, do you notice it's still only hitting the upper band of this resistance down move? All right, now, so nothing is there for you to really scream and shout bullishness out there. All right, and if we really go to Tesla, it just looked downright ugly. Right now, so what I'm trying to tell you is, if you try to bargain hunt, right, on any of these stocks, right, thinking that they've been oversold, all right, sold too much too fast, right, you might be in for a shock. Right, so you better have deep pockets, right, if you are trying to bottom hunt over here. Right, you rather be a little bit late, right? You rather to pick it up a little bit more expensive, right, than to take unnecessary risk, right, in this market condition, right, where everything still looks, right, pretty negative. All right, now, so I don't want to put too much scare or fear into you, all right, coming into the weekend, right? But next week, right, come next week, we have the Fed, right? So all eyes on Fed, that's for sure. Right, so I would believe that come Monday and Tuesday, right, we're going to have a very, very controlled trading range, right, only to wait until the Fed announcement on Wednesday, right? While we are all sleeping, of course, because these news are going to come out, if I'm not wrong, at about 2 a.m. or something like that, Singapore time. Yeah, all right. Now, so only when what the Fed speaks, all right, then, right, we'll probably start to see some major reaction taking place in the market. Yeah, all right. Now, so in the meantime, all right, I really hope, all right, that all of you are going to stay safe, right? Trade knowing what you're doing, right? And, right, keep yourself safe for next trading week. Right now, so with that over here, right, I hope you've gained some additional knowledge, right, and your understanding of what the market is doing right now, right, and hopefully in my next video, right, I'll continue to bring more market summaries to you, right, and help you make more informed decisions, right, about how you want to trade this market. All right, so this is Terence Tan from the I'm Possible Investor, right, signing off in this video, and I'll see you in the next one. All right, enjoy the week ahead, right, and stay safe trading, everybody. Bye for now.